Warning: the dynamic investment program is a tool only and can be misused for particular investment goals. It is a simple Excel program and as such can be corrupted. Consult your financial advisor before using the dynamic investment program and use at your own risk. By using this program, you agree to hold the Monetary Reset authors harmless for the consequences of its use. In a previous video, I laid out the bull case for the Hedera hashgraph cryptocurrency. But I will be the first to admit that determining the value of a cryptocurrency is very difficult, particularly one that has not been traded or used at scale like Hedera's HBAR. I've used the method I'm about to outline for stocks, ETFs, and precious metals with considerable success. That said, it has performed best when investing in cryptocurrencies. This is mainly due to the fact that the DIP program is ideal for volatile assets and also helps with the psychological challenges of dealing with that volatility. Cryptocurrency exchanges also charge fees based on a percentage of the trade size, compared to many online stock trading sites that use a fixed several dollar fee. This too makes cryptocurrency ideal if using the program to purchase small amounts of a given token. First, let's discuss other methods that might be used when investing in a new cryptocurrency. A large single purchase can be made if the investor has strong conviction the asset will appreciate, but this can be devastating if the asset then drops in value. Dollar cost averaging is one of the most suggested methods for investing, and certainly has its place. Dollar cost averaging is just another way of saying you invest a fixed dollar amount each month into a given asset. While this is a mindless way of investing, and that takes the pressure off the investor, it does not take advantage of price dips as aggressively as some investors would like. Frankly, it's also boring. Another method is to trade the cryptocurrency market. Technical analysis and trading advice about crypto abounds on the internet. Maybe abounds is too soft a word. Maybe it would be more accurate to say, technical analysis for trading cryptocurrency is deafening on the internet. But haphazardly trying to follow this advice is no way to invest in this market. Becoming proficient at trading can take years of education, experience, and heartache. Trading also involves buying and selling, and experienced traders often have little conviction about the long-term direction of an asset. Said another way, trading, at its core, does not equal investing. Trading is fundamentally different than investing, but there are techniques where you can use technical analysis to accumulate an asset, but this can still be difficult for a novice. Investors attempting to buy the dips often get a deer in the headlights mentality, where they are afraid to buy as the price is dropping for fear there are lower prices to come. Once the price starts to rise again, they may feel as if they've missed the boat, and again have a difficult time pulling the trigger on a purchase. This is addressed by the dynamic investment program by attempting to capture the structured, low-stress investing of dollar cost averaging, while taking greater advantage of lower prices as prices fall. As mentioned, it works especially well with volatile assets. This chart and the results were not cherry-picked. I simply made up the chart to appear volatile, pulled the prices out of a hat, and applied them to the program as initially set up in the download. Dollar cost averaging resulted in 193 shares or tokens accumulated at an average price of $31 for a total of $6,000 invested. Using the dip resulted in 235 tokens at an average price of $23 for only $5,500 invested. At this point, I advise downloading the program and following along, testing the various aspects of the program. The program can be downloaded by visiting themonetaryreset.com and clicking on the provided link in the Dynamic Investment Program post. Here's the program as it appears in Microsoft Excel. Now, I'll run through how the system works. The first step is to enter the amount in units purchased in this column. This can be a first purchase or culmination of prior purchases. Next, enter the purchase price per unit here. Future purchases will be entered in the same way. The total units, total investment, and most importantly, the average purchase price will be calculated at the bottom of this section. The average purchase price helps determine your purchase guidance in the next section. Next, enter the percentage of the average purchase price in this column. Doing this will set the upper price limit for a given purchase amount. If the asset seems fairly valued, or you don't know its fair value, but want to get involved, 100% should be set near the center of this table. Now enter decreasing percentages as you move up this column, and increasing percentages as you move down. This will allow you to invest with a significant price range, whether the price of the asset increases or decreases. If the asset seems richly valued, place the 100% value near the bottom of this table, allowing a more significant range if the price falls. On the other hand, if the asset seems undervalued, the 100% should be near the top. In the amount to purchase section, enter how much, in dollars, you would be willing to purchase at different unit prices per HBAR or shares, as is shown in the upper price limit column. Contrary to the percent of average purchase price section, the amount you purchase should max out at the top of the column and decrease as you move down. The frequency is how often you're planning on purchasing, weekly, monthly, or quarterly. Significant testing would be advised at this point, altering the amount to purchase values and the percent of average purchase price to meet your investment goals. Also try backtesting based off the target asset's past performance or those of similar assets by filling out the purchase history with those scenarios. You can also try using price fluctuations you can envision for your asset in the future. Also, consult a trusted investment advisor during the testing to vet your strategy. Once the program is responsibly filled out, assuming the fundamentals of the asset do not change, relax and let the program guide you as you invest. In this example, if the price rises to 17 cents, your purchase amount would be $300. If the price falls to 5 cents, your purchase amount would be $800. When testing or using the program, you will notice the upper price limits will adjust based on new purchases entered. The program will allow you to buy more on a price dip, but the amount purchased will taper over time if the price remains down. This feature will also result in your price limits increasing as you buy at higher prices, although the adjustments will be slower due to buying smaller amounts at those higher prices. These adjustments will be more profound when you have a small position, but won't be as influential as you increase your investment in the asset, something I refer to as anchoring the program. I've found this to be desirable, regardless if you have just started investing in an asset or have been investing for years. When setting up the program for my own use, I ensure it will allow enough of a cash cushion to take advantage of drops in price. This prudence does come with a cost, and that is, your cash holdings may build to a level above what you feel is necessary. This isn't a bad problem to have, but it should be addressed. First, I would consider diversifying into other assets. If you would rather stick with the same asset, you can make adjustments to the purchase guidance as outlined above. Getting back to why this program is such a good psychological tool, when dollar cost averaging, trading, or making a one-off purchase in an asset, whenever the price drops, it's always pretty difficult to deal with. In comparison, I've found when using this program, it's not only fun when the price goes up, like always, but it can be exciting when the price drops, causing the program to increase your buying. One drawback is if an asset goes straight up from the time of investing, you can end up underinvested, but this is rarely the case. And hey, at least you pulled the trigger and bought some. In my opinion, the benefits greatly outweigh any drawbacks. There is a selling portion included with the program as well, but this can be covered in a future video if requested. From a more macro standpoint, using this program could provide a healthier marketplace. Trading chases trends, buys more as the price breaks through resistance, and dumps as the price falls through support. This causes damaging spikes and crashes. I think the trading, and not the investing mentality in crypto, causes the volatility to be even worse than there otherwise would be. If used at scale, a program like this one would promote a more stable market, which would help in the crypto world. Good luck if you choose to use this program for buying HBAR or any other asset you choose to invest in. Considering I created this program in Excel, it's obvious I'm not a developer. If any developers, especially those building on Hedera, would like to use this method of investing to build off of, please contact me. For anyone who enjoyed this, the HBAR bull case video, or other material I have put out, tips are appreciated. please visit themonetaryreset.com to support the site and channel. HBAR is accepted with the QR code located to the right on this page. The cost for the program is 60 cents in HBAR. Of course, this is on the honor system. There's nothing preventing you from downloading it for free. I'm just trying out some micropayments and looking for some motivation to put out more content. Thanks for contributing. If you don't have any HBAR to give, Phase 2 testing is open where you can earn 1,000 HBAR. What are you waiting for? Any support is appreciated. Nothing motivates like a little HBAR or Bitcoin. Again, good luck.